Hey, what's up, everybody? It's Tom. Part of my AI series, I asked Grok 2, which is Twitter's AI, should people buy term life or whole life insurance? When deciding between term life and whole life insurance, several factors should be considered to determine which type of policy best suits your needs. Grok goes on to explain term life insurance costs generally less expensive for the same amount of coverage compared to whole life insurance. And that is true. It's significantly less expensive. Coverage periods provide coverage for a specific term or period, uh, 10 years, 20 years, or 30 years. Actually, I can get you 40 years of life insurance, term life insurance. If you die within this period, your beneficiaries receive the death benefit. Term life does not accumulate cash value over time once the term ends unless you renew or convert to a permanent policy. Coverage ceases. And I like to talk about conversion all the time. I only write term life insurance policies that could be converted to a permanent policy just in case you have some event, a health event that would significantly reduce your not chances of getting life insurance, because I can always get you life insurance, but if you had a some sort of health condition that would limit your choices. So conversion is very important, and that's why it's so important to get the life insurance while you're healthy. Let's go on. Ideal for those who need high coverage for a specific period, like until children are out of college or until a mortgage is paid off, or those on a tight budget. And who's not on a tight budget anymore, right? All right, so let's go on the whole life cost. More expensive because it covers you for your entire life if premiums are paid. Lifetime coverage, as long as premiums are paid, coverage does not expire. Cash value builds cash value over time, which can be borrowed against or withdrawn. This acts as a savings or investment component within the policy. Okay. That's their words, not mine, because I am not supposed to explain whole life as an investment component. Dividends. Some policies might pay dividends, which can be used to reduce premiums, increase cash value, or be taken as cash. All of the whole life insurance companies I write for do pay dividends, but dividends are never guaranteed. However, the companies I wrote for, I've been paying their dividends for over 100 years. Haven't missed a payment, and that's going through world wars, depression, everything. Ideal for those looking for a lifelong protection who can afford a higher premium or might benefit from the investment aspect over the long term. Again, investment aspect is their word, not mine. Considerations. Financial goals. If you're looking for insurance as a pure risk management tool, term might suffice. If you're also looking for a savings or investment vehicle, whole life might be more appealing. Age and health. Younger, healthy individuals might opt for term insurance with the possibility to convert to whole life later in if health changes, which is very important. Okay, estate planning. Whole life can be used for estate planning, providing funds for estate taxes, or ensuring heirs receive a financial benefit. Financial flexibility. If you might need to access funds later in life, the cash value in whole life could be beneficial. However, remember that withdrawals or loans against the policy can reduce the death benefit or cause the policy to lapse if not managed properly. And yes, you can borrow against it, but let's keep in mind, typically a premium for the same amount of coverage is going to be about 10 times if you buy a whole life insurance policy. So you can borrow against it, or you can just get the term insurance, invest the difference. Okay? And I'm not anti whole life. It's just term, I think, is a great value. Okay, investment alternatives. Compare the rate of return on the cash value with other investment options. Whole life's guaranteed returns might be lower than a potential returns from other investments, which is true potentially. The stock market, the S&P 500, typically outperforms the performance of a whole life insurance. But if you're not a stock person, then maybe whole life is for you. Ultimately, the choice depends on on your current financial situation, future financial goals, how long you need coverage, and your comfort with the cost. It might also be beneficial to consult with a financial advisor who can provide you personal advice based on your specific circumstances. Remember, insurance is primarily about protection. Agreed. The investment aspect of whole life should not be the sole reason for choosing it unless it aligns with your broader financial strategy. Yes, I agree with that. Disclaimer: Grok is not a financial advisor. Please consult one. Hey, I know one. Don't share information that can identify you. Well, I disagree with that because I would need that if we did business. Anyway, if you like this video, please give me a thumbs up. Please consider subscribing. If you know anybody that would benefit from a conversation with me or seeing this video, feel free to share it with them. If you have somebody you trust, a financial advisor, a life insurance agent, and you've just been procrastinating, call them. Pick up the phone right now and give that guy or girl a call. If you don't, but you think it's important to get life insurance, guess what? I'm a life insurance agent. You can always contact me. My number will be in the description. Feel free to shoot me a text or give me a call. Have a great day. Be safe.